Friday, August 30th, 2024, Maneco 64, home of alternative economics and contrarian views. Good morning, Clive.
Good morning, Mario.
Yeah, I hope you've had a good week. The weather here has been pretty good.
Yeah,
About
it's warm here. You can probably see my air conditioners on. The sunflower in the background, which is nearly at the end of its life, is moving around in the breeze from the air conditioner. It's
uh,
not agreeing or disagreeing with me if you see it nodding.
yeah. So we're gonna look at quite a few things today, but I want to start and I'm gonna share it right away with this story I saw this morning, but it's from yesterday. And I think it's really significant as far as the dollar is concerned, and the fact that yeah, the dollar's been challenged as a international reserve currency. So China's international use of renminbi surges to record highs. Closer ties with Russia bolster Beijing's effort to use its currency more in global trade. And I went through this article, and this chart is really interesting, Clive. If you go back to 2010, uh, the Chinese didn't really use their currency to perform global trade. It was at zero, and now since 2023, it's overtaken the dollar. And as you can see, the dollar is dropping really quickly. And seeing that China's probably, well, it should overtake the US economy, I think, in the next few years, if it hasn't already, on a purchasing power parity basis. But what I
Well,
what
so
I yeah.
if we go back 15 years ago, the ability to do anything with the renminbi was very restricted. In other words, they had exchange controls, and they still do have them. I recollect a long time ago, America was asking for China to open up and allow the renminbi to be more freely traded because the allegation by the United States was that they had adjusted the exchange rate to a level which was too low versus the US dollar, giving them a trade advantage. And the USA felt that they should open up. So to some extent, when you look at that chart, China has opened up, and to some extent, people are now willing or more able to trade between two countries in renminbi instead of what they used to trade in, which was just dollars.
Yeah, and if you look here, it says the sanction situation created a huge stimulus for China to develop its financial system and develop solutions to link China's system with the Russian one. But if you look here at 2022, when the war started with between Russia and Ukraine, yes, that the use of the renminbi has gone up a bit, but it had already started here back in, well, it hasn't been something just with Russia, in my opinion. And you can see here that it says growth of trade settled renminbi also uh, has also been helped by currency swap lines that Beijing opened or renewed throughout 2023 with Saudi Arabia, Argentina, Mongolia, all commodity producers with goods China wants. And then it says here, since 2022, new clearing banks for the renminbi have also been established in Laos, Kazakhstan, Pakistan, Brazil, Serbia. So I think this is going to increase.
Yeah,
And
I mean, when you have two countries trading, there's no logical reason to use a currency which is not one of those two currencies. I mean, if we have tourists from France coming over to Switzerland to buy luxury goods, they're going to bring euros with them, and the shops here are going to take euros. If those tourists were bringing dollars, well, there's going to be the shopkeeper's going to have a bit of a problem saying, oh, well, why would I take dollars? I can't go shopping. I can't go shopping in France with my dollars. So it's quite normal that if China is trading with India, they should trade in rupees or renminbi. And of course, the opening up of the exchange controls a little bit in China is facilitating that. So I think it's a trend which is going to continue, and that will definitely reduce the importance of the dollar in international traders as the Chinese currency starts to take on more and more significance in international trade with China. And China, of course, is a major trading nation, as is the United States. But of course, I don't see America trading with China in renminbi anytime soon, and maybe not Europe either. But we'll see. It could happen.
Yeah, and this is one of the reasons why, Clive, I think a lot of countries, as you can see here, this Krishan Gopal on Twitter, he's an analyst for the World Gold Council, and he updates regularly all the countries that are buying and selling gold. But if you look here, you've got Azerbaijan reserves rose by 10.3 tons between April and June. You've got Uzbekistan gold reserves increased by almost 10 tons in July. You've got Poland in July, the reserves increased by 14 tons. Uh, so yeah, it says here the PBOC hasn't increased its holdings, but I'm sure they're doing it through other state-owned institutions in the U.S., in China, excuse me. And why is this important? I think it's important, Clive, because I've been following what the Chinese have been doing for the last 7 years or so, like the infrastructure to run a major reserve currency, in that they've created the Shanghai Gold Exchange, the Futures Exchange, and what you can do in the Shanghai Gold Exchange as a foreign broker or banker, let's say to one of these countries that they're trading in renminbi with, they can take the excess renminbi that they don't really can't use, let's say, to buy. Indonesia can't use, would rather use maybe the dollar or maybe even the real to trade with Brazil. So they can go to the Shanghai Gold Exchange and unload their renminbi and get gold out, shipped to them. And I think that's what's happening. And that's why we're talking about this to our viewers in the US. All this will mean is that countries around the world are not going to need to hold as much treasuries as they have for the last, 80 years almost since the end of World War II. And that's highly significant. That means, I think, more inflation because interest rates are going to be, U.S. Treasury yields are going to be hard to keep low unless the Fed, of course, starts printing or doing QE, but that will only weaken the dollar.
Well, that would be yield curve control, or there would be yield curve control at that point when the Federal Reserve steps in and starts to buy the bonds which are issued by the government. I don't know if you saw this, Maria, but just yesterday in China, the Ministry of Finance issued 300 billion renminbi of long-dated bonds. And guess who bought them? All of them. The People's Bank of China, the central bank. So in the morning, they issued 300 billion to raise money to spend, of course, because the Chinese economy is slowing down and they need to support lots of things, especially the housing market. And to rather than crash the bond market by dumping all those bonds in the hands of investors who probably didn't want to buy them, the People's Bank of China, which is the central bank, basically stepped in and bought the whole lot, funding the government. So how does the PBOC do that? It prints money.
Yeah, I mean that's what they did in 2020 during COVID here. The UK, I think the government borrowed about 500 billion pounds, and the Bank of England bought it. They said it wasn't because they went through the gilt market. They didn't buy it directly, but it's as good as. But it's interesting, Clive, that at least the Chinese government they borrowed this. Was it 10-year?
I saw it was long dated bonds. I
Yeah.
didn't
So
that they issued. I didn't see
their,
what maturity what was it actually.
their yields are very low, so it's a good
Oh, it
place.
says here. I got it in my screen. It says it was the People's Bank of China said it bought 300 billion of 10-year notes and 100 billion of 15-year notes from primary dealers. So what happened? The government issued those notes in the morning to the primary dealers, and the PBOC bought them back in the afternoon, guaranteeing the primary dealers, which would be the banks, an
Yeah,
instant profit.
yeah,
And basically, that because the government then spends that money, the government gets poorer, everybody else gets richer, and there's more money in the system, which means the housing market is effectively to some extent supported, or
Mm.
the economy in some ways supported by that extra money coming into the economy.
Yeah, you can see here that Chinese government bond yields are still very low. They're below 3%. So is it 300 billion total?
It looks like 400 billion.
So
It says the Financial Times article on this morning says it was 56 billion US dollars worth, but it was obviously renminbi that they issued.
yeah, yeah.
Oh
So
yeah, it does say it was 400 billion of renminbi this morning
what's the
or,
exchange rate?
or
Like
Thursday.
seven, Clive?
Yeah, it'll be something like seven. I haven't got the
So
exact number.
it's about $57 billion, which actually, yeah, it's a big amount, but compared to what they did in the US and even in the UK, it's not that much. But this should continue to help gold, I think, when the Chinese do this.
Well, I think we're in for a possible record weekly closing on gold today. I see on my screen it's 2520. It
Yeah.
just popped up to 2521. So I don't know what the all-time record is, but certainly this will be very close to, if not exceeding the all-time record,
Yeah,
at least on a weekly basis.
I'll show you guys here. The all-time record was on the 20th of August, and it was 25.31. So we're not, you can see here, Clive, 25.31.76. And it's been banging its head against that area. So yeah, I think even if we don't go through there today, uh, we could very easily go through 25, 31, 32 next week. And on a weekly basis, that's what it's looking like. And then on a monthly basis, it's looking very good, as you can see.
In general, buying gold on a Friday morning is quite often, or more often than not, a bad move because they hit it back on Friday evening to try and suppress the gold price. But last Friday was a bit of an exception. It actually surged on the Friday afternoon. So I'm waiting to see if today will be an exception. We have a bit of a surge. Looking at the chart, it's a very clear flag pattern. I see a positive flag pattern, and although I don't really believe in charts, I got a feeling that this is setting itself up for a major rally in the gold price from here. That's my gut feeling. Have you been increasing your gold reserves, Mario? Are you going along with China and India and other countries like that, or are you
Uh,
standing pat?
well, fortunately, we have been able to increase it in the last uh, few weeks. Yeah, I didn't add as many tons as all expectations. We're talking a few ounces, but I think it's always a good time.
Yeah,
And
I found that. Let's have a quick look and find something. Yeah, there it is. I bought this. That's a photograph. I haven't got the original here.
oh, I see. So it's a 1 ounce. Oh yeah, it's the Black Bull and Clarence. Yeah, it's the Beast,
It's
isn't
from
it?
the Beasts of England. It's obviously not a new coin because it's dated 19 what year
28.
is it? 2018. So it came into the hands of a well-known gold dealer here in Switzerland, and they happened to let me have it at the gold price plus. Obviously, I paid uh, something extra on top of the gold price.
Yeah. Yeah. I mean, the reason there's a premium for the viewers, if they don't understand, is that it's just like anything else. Like if you buy a new car from a dealer or a used car, yes, the car might be worth 10,000 pounds, but the dealer has to make a profit to stay in business. That's why there's a premium. And sometimes the premium for silver is higher because um, yeah, the price of silver is a lot lower in nominal terms. So if they only charge 2%, it's not worth for them dealing in silver. They'll probably charge 5 or 6%, while in gold they can still make a good profit if they charge 2 or 3% because the nominal price is a lot higher. Um, Clive, we're talking about gold here, but can we look at silver now? Because you've seen this as well in the last couple of weeks, and I was a bit not suspicious, but I thought this seems like doesn't seem like fresh news about the fact that Samsung is developing solid state batteries that are have to use a lot of silver, and that it could revolutionize the batteries for electric vehicles because silver is a lot lighter and it's much more efficient. But to me, it seemed like someone's trying to yeah, push silver higher or something. And then I contacted you yesterday, Clive, we should talk about this. And then you told me something about this story. So maybe you could tell the viewers about it.
So the gist of the story is that, and it was circulated widely in the last few days, that Samsung has got a new technology which will use silver to make much more efficient batteries. The batteries will be lighter and more powerful and last longer. So I tried to research this story, and I went finally end up on the Samsung website. The story actually seems to emanate from a story a news release they released in 2020, in March 2020. So it's true, but obviously they were saying it's very much prototype at that time, and it's going to take time to develop real life. Once they've developed real life uses, it's working. It's going to take a lot more time before it's working well enough to put into actual batteries. But we're now, since that article, 4 or 5 years down the line, so it could well be that we're close to seeing silver inside batteries. And if it's true, as Samsung says, that it prolongs the life, it delivers more power, it reduces the weight, and it lasts. The batteries will last longer. In other words, for an electric vehicle, those cars will be able to travel hundreds of miles further with these new technologies. Then, of course, that could be very important. And according to some of the articles, they said that this could add up to 1 kilogram of silver per vehicle, which would be like adding roughly $1,000 worth of, is quite a little bit under that, but close to $1,000 worth of silver in the batteries to run a car. If this were to become widespread, it would take a huge amount of silver, probably take the entire mine production if it was to become very widespread. But it's not going to happen overnight, and it's going to take many, many years to be fulfilled. I think what's more relevant here is the generalized increase in the use of silver in electronics. Now, the Silver Institute published an estimate that last year, the use of silver in electronics, which is one of the major uses of silver, it's perhaps the most major use of silver, increased by 20% year on year. And a big chunk of that increase comes from solar panels, which increased, I think it was by 47% usage. So we are on a trend where the use of silver in electronics is increasing. And the reason for that is twofold. Firstly, we have more and more devices which are smaller and smaller, and therefore require safer or better connections. And the smaller you get, the more pure you need. You can start off with copper for a thick wire, but when you get to a microscopic wire, you probably need silver. And if you get to a really, really microscopic thing, you need gold to have the purest connection. So what we're seeing is a trend for microelectronics to be smaller and smaller, and that requires more and more use of silver. And of course, we're seeing more and more devices have photovoltaic cells in them, whether it be a calculator or a battery charger, your telephone, or simply something which is telling you the time on your fridge or a clock. And each of these devices will, if it's photovoltaic, will require a little bit of silver there, maybe minuscule amounts, but put it all together. That did amount to a 40-something% increase in the use of silver in photovoltaic last year, and 20% overall in silver, in use of silver in electronic devices. And that's why in 2022, for the first time ever, the consumption of silver for industrial and similar uses, not including in investment into metals, exceeded the total mine production. And that gap, that shortage got bigger in 2023, and it's forecast to become bigger in 2024. and the difference, making up the difference in the shortage of mine production not being quite as high as, or being now significantly less than industrial use, the difference is coming from recycled silver. So if they want that extra silver, the price has to be higher. Otherwise, my granny is not going to say, "Oh, those silver stand candlesticks I don't use anymore. I'll take them down to the pawn shop to be melted down." At a certain price point, that silver comes out of the closet and goes back into the system, and so the silver price is the balancing factor, which causes the supply and demand to come into balance through effectively recycling. You can't increase the supply from mine production. That takes years and years to increase. And in fact, the supply from mine production has been dropping year after year for the last decade. It's lower than it was 10 years ago. And it's not likely to change very quickly, even if, as is now true, there's a lot more silver in the ground, which is commercially viable. But it still takes time to put the digging equipment in place, do the surveys, and get it out of the ground. So the supply of silver from the mines won't increase much, but the demand for silver is increasing rapidly. So to my mind, that basically means we need a higher price to get that silver from recycled.
Yeah, and I would say I don't think many grannies or even older people that have any that much um silverware left. Most of it now is like just coated, silver coated, electroplated. They say so. I think it's going to be harder and harder to get like scrap silver. And I think I actually read about this 2 or 3 years ago, and they said that they were working on making it commercially viable by sometime later in this decade. So I guess we could have another 2 to 3 years until they come out with something that they could come out and say, well, we just developed here a battery and Hyundai is going to start using it or something like that. And I think the markets will discount that a few years ahead because that's how markets do. So I think that should keep a floor on the silver price, even though right now it's finding it hard to break through 30. But anyway, Clive, could we move on to the UK now? Because uh, I'm seeing a lot of policies here by the new government, and I have to say I'm apolitical. I think the Tories were not much better. They hadn't changed, for example, the tax thresholds for I think 7 or 8 years, which means with the inflation, people are paying a lot more tax because their earnings go up to higher rate bands. They hadn't increased the threshold for capital inheritance tax since 2009. So yeah, the Tories are just as bad. But what I'm seeing here, and I'm going to share this with you and the viewers, is that the new government, the Labour government or Star government, seems uh, determined to go after uh, people who have a bit of wealth or people who have a lot of wealth, and they think that they can take that and give it to people who don't have as much, and that will create wealth. And in my view, that's completely wrong. But I guess they're politicians. So this here is all speculation, but it will probably come true when Rachel Reeves, the chancellor, comes out with her budget on October 30th. So it says here, fears of rise in UK capital gains tax triggers selling frenzy. Wealth managers report upswing in activity as investors position themselves ahead of October budget. And before I let you chime in, Clive, I've read through this, and it says that this might even help the tax receipts for this year because these people selling this would not have sold all their stuff, so they're going to get a lot of receipts already. And what if they don't do it? You know, it's quite a scenario in my view that it's not safe for capital if you have to worry about this, that the government's gonna increase the tax rates. Um, and so, yeah, what do you say, Clive, to that?
Well, first of all, if you know what you're doing, there's lots of ways of mitigating or deferring that tax liability. There are some very sophisticated ways, and there are some very simple ways. Obviously, one of the simple ways that you and I know about, Mario, is to invest in the legal tender UK coins, the gold coins, where you won't pay it. But of course, if you have a share portfolio, there are quite sophisticated ways to let's say, I'm going to use the word defer because it's not really avoidance, but you can push those liabilities uh, 10, 20, 30 years in the future, despite the fact you're selling things and making gains along the way. And so it can be very profitable if you do it the right way. Uh, so first of all, anybody who's got substantial wealth where they are making substantial gains year after year needs to have a look at the options available. And I'm not going to go into that because I'm not a tax advisor, but I'm well aware of them. The other thing, Mario, which I think is coming, will be inheritance tax. And again, people need to think about how they're going to address any reduction in the reliefs of inheritance tax. A lot of people think you can get 300, is it
25.
£325,000
Yeah, right
of
now,
tax free,
no, right
and then it,
it covers
and then
that.
if
Sorry, Clive. Right now, let's say a couple dies, it can go up to 1 million because you add both of those, and you can also add some more. But yeah,
yeah.
if they take all these extra I don't know, conditions and just put it down to 325, there's going to be, yeah, they're going to have huge tax receipts, especially seeing that the average house price in London is like 500,000, while nationally is about 250.
So yeah, in the UK, if you do your inheritance tax right and you do your planning right, you can get away with not paying an inheritance tax on £1 million. If you do it wrong, you're only going to have 325,000 tax free. So it's quite important to understand what the rules are and how they work, so you can actually save the tax on the whole lot. But did you know that in the UK, only one person in 25 actually pays any inheritance tax? So the vast majority of people who die are below one or other of those limits. So the government's not getting, from out of 25 people who die, the government's getting no tax at all from 24 of those people. But out of those 1 in 25 people who do die, the government's getting 7.5 billion of tax coming in. To put that in perspective, isn't the hole that they're expecting this year? You tell me, Mary, maybe you know, aren't they expecting a 20 billion hole in their finances this year?
22 billion, yeah.
So I'm not proposing or suggesting or recommending that they do anything about inheritance tax, but certainly if they could increase the number of people out of 25 who are paying that tax from 1 in 25 to 2 in 25, that would make an improvement on the 7.5 billion that they are getting. But I do think it's a real possibility that they'll start to pare back some of the allowances that are available, making that 1 million not 1 million, but a much lower figure.
Yeah, and the thing about capital gains tax, and gold is that, as Clive said earlier, legal tender coins of the realm. So like this year, it will announce King Charles Britannia or Queen Elizabeth Britannia, or even a sovereign or half sovereigns. They're all coins minted in the UK. So let's say you bought a sovereign 20 years ago for £50 and you bought 10 of them. Right now, you're making like 350 pounds per coin. So if you multiply that by 10, that's 3,500 pound profit. So you'll be just below the 3,000 threshold for capital gains, which actually the Tories, Clive, they lowered that threshold from 12 to 6 to 3. And now the Labour government is saying that they're going to raise the rates because the rate of capital gains for the lower rate taxpayer, the taxpayer that doesn't pay the higher rate, it's 20%. above the threshold. And for the higher rate taxpayer, oh, actually, it's 10% for the lower rate taxpayer. And for the higher rate taxpayer, it's only 28%, even though you might be paying 45% in income tax. So I think a lot of people, these big wealthy people that are selling their assets, I think they would do well to put some of their proceeds into these coins because they're capital gains tax free. And I think they're going to raise capital gains tax rates. And they might even also give you no threshold. So even if you make a pound on it, you're going to be liable for tax. And yeah, and I'm sure some of them are going to do other things with their advisors and accountants to try to mitigate more taxation. Or, Clive, they're going to take their capital abroad. That's the other thing that I think is going to hurt the UK. There's going to be a lot of capital flight, like we.
Well, we mustn't forget in the 1960s when they put UK taxation up to an extremely high level, there was what's called the brain drain, meaning that anybody with any brains decided to up sticks and leave the UK and go work in America, where they could have a much lower tax rate and keep more of their hard-earned dosh.
That's right, and a lot of the like wealthy celebrities, they move to places like Switzerland or Monaco as well.
I mean, one of the interesting things about the modern world, let's say the post-COVID world, it's become apparent that many, many people are no longer tied to an office. They don't have to be turning up at an office in the center of London. So if you happen to be a Eurobond trader, who used to be sitting in Canary Wharf trading Eurobonds, you had to be there because the machines were there, your colleagues were there. But now you could be sitting in Dubai or Monaco or Malta or Isle of Man or what was that little island you mentioned, which has got no tax? Was it Sark?
All right.
There's places all over the world where you could be Cayman Islands, Bahamas, Barbados. You could be sitting anywhere in the world, literally with all your colleagues around you on the screen and all your trading partners around you, and they don't even know where you are because you're just a virtual face on the internet. You don't have to be physically present anywhere.
Well, do you think some kind of global government could emerge and they might even start taxing people like that? I mean, that could, if you start seeing a big brain drain and nomad capitalists going everywhere, I
Well,
would.
we're seeing that already. I mean, look at all the companies which moved, like Amazon and others, and Google, who moved to Ireland because of the lower tax rate, and now the European Union has said, "Sorry, Ireland, you've got to hit them full whack." Because we don't like the fact that they're taking advantage of your lower tax system. So, yeah, the world is going in the direction of trying to close down the opportunities for people to reduce or mitigate their tax by changing location.
Yeah, yeah. And about gold and even silver, because it's capital gains tax free. If you're interested, you can check the description of all my videos. If you're in the UK, I have an affiliate called Gold Investments. I've been dealing with them personally since 2002. They're very, very reliable and they have a good reputation. And in the US, I'm affiliated with Andy Schechtman and Miles Franklin. Clive, can we move over to the US economy because there's a lot of talk that, and I spoke about it yesterday, that the yield curve, the difference between the 2 and the 10-year yield is almost becoming positive. I think we're around -3, -2. And uh, at the same time, we had the GDP for the second quarter, and they said it grew by 3%. But then you see news like this, and I'm going to share this second here. Dollar General warns poorer U.S. consumers are running out of money. This company, they sell a lot of discounted and cheap stuff for lower income households, and that their shares dropped more than 30% yesterday. And just before I let you chime in, I wanted to show you this as well, and the viewers. This is from the Federal Reserve Board. So this is all the wealth in the US. So if you click here, the bottom 50% of Americans, they own 2.5% of all the wealth. And the bottom 90, if you look here, you add the two, they own 33%. So that's the bottom 90. So the top 10% own like 67% of everything. And I think what this shows, this Dollar General story, is that we've got an asset bubble, and that's helping the top 10%. So it's like a tale of two economies where the bottom 90%, or especially the bottom 50, are doing really badly. And and that's why we get people saying, "Well, I'm not feeling the I don't know why the stock, the stock market might be really high and everything, but it's not affecting me."
Yeah, I mean it's a story all around the world, and it's always been there's always been a gap between the rich and the poor. Um, I think it's the way the world has worked, but the alternative of communism works much worse. So
Yeah,
what's the
I
right
agree
answer?
with that. I actually think though that the the current monetary system we have, like the fiat currency system that we've had since 1971, it exacerbates that
Yes,
because
it benefits the rich.
because if you and all the laws and the bills rules are how can I say, they are tilted towards the very rich who can buy politicians, because I've seen the statistic, Clive, that in the 60s CEOs earned about 20 times the average wage of their employees, and now it's in like 300 or 400 times. So I think the fiat currency system doesn't help, because the bottom 50, or people that don't have as much wealth, uh, they can't buy assets to protect their financial situation. They have to depend on a rapidly depreciating currency, and that hurts them. So, and I agree with you, communism is a lot worse. And Margaret Thatcher, I saw a little clip in Parliament. She said once that socialists, uh, there's a gap between the poor here and the rich. So what socialists want to do is bring the rich down, but what that does is bring everyone down. Um, so the way to do it is try to make everyone, bring, even if you go up, but the gap is a little higher, the poorer will get better off. But I don't think that can be done under our current system, where the big corporations, the big banks, they control everything, and the Bank of England, ECB are printing trillions uh,
Well,
to help the asset owners.
what's needed in every country where the gap is large is, first of all, the right kind of education. So people understand when they get to leave school, they understand the sorts of things they need to understand. And clearly, in the modern world, one of the things you do need to understand a lot about is investment, finance, and budgeting. How to how to not spend more money than you're actually earning. But how many people say, "Oh, I'll buy that car"? I remember a story many years ago. My niece um, put her name down as a guarantor for a car by her boyfriend. Uh, that the rate of interest on that, when you worked it out on a leasing contract for a £6,000 car over 2 years, they were going to pay £12,000. You know, but they didn't understand that. They hadn't figured that. All they saw it was as it's so much per week. But if they taught the right sort of things in school, there'd be far less people getting into financial trouble like that, and they'd manage their finances much better. And if they're managing their finances better, it means there's less money being made by the bankers, because don't forget, when you've got high leasing rates like I just described, who's making the money? Well, it's the bankers at the end of the day, because they're the lenders. So that's your first point. And the second thing I think we need in any economy to bring the poorer up is to improve the ability for them to go to work easily. For example, childcare facilities, those sort of things. They shouldn't tax mothers on their salaries to the point where it's not worth the trouble of going to work. They should say, we're very glad that mothers go to work, and we'll provide you with free childcare, or alternatively, if you have to pay for the childcare, we'll allow that as a deduction from your salary. I mean, those are some. There's many more examples, but it's no good saying, well, to help the poor come up, we'll take the money off Clive, who works 14 hours a day, and give it to Joe, who works 2 hours a day. That,
Yeah.
I'm not happy with that. I'm going to say,
No,
well,
yeah.
NAFTA, I'm out of the country.
Yeah, I tend to favor more taxing everyone less, so that maybe mothers, and I'm not saying mothers shouldn't work, but maybe they might want to stay at home and take care of their own kids. They don't have to go to work, or it could be the father that stays at home. I'm being quite open and flexible here, but and they talk about child poverty, but the children are poor because they inflate the currency so much, they tax people so much. Yeah, and that's how I see it. I think Clive, uh, not just here in the UK, but everywhere, even in the US and especially in Western Europe, people tend to think that the government owes them a lot of stuff for free, but they forget that government doesn't have any money and has to take from Peter to pay Paul. Just to let the viewers know, it's 9:20 a.m. London time, so it's still quite early US time. But just a little rundown here. Gold is now at 25.24. Silver is at 29.55. And I see that the Dow futures is up 100 points, Nasdaq 134, and the S&P up 25. So we'll see what happens later on today if gold could actually close at an all-time, not only at an all-time high, but all-time daily, weekly, and monthly high. So I think the bull market in gold is still really yeah, it's there's no hype. So I think we're still climbing a wall of worry. And it's more also fiat currencies dropping, isn't it, Clive?
Yeah, I mean, I was having a conversation with a trader yesterday. He is retired. He used to be an oil trader, and he that these days makes his money trading anything and everything. But the one thing which surprised me, I started discussing gold with him, and he said, "Oh, no, gold's a dead asset. Nothing to do with gold." I said, "Well, do you realize it's an all-time high?" "Yes, it's too high," he said. And I said, "Well, just because something at the top of the chart, you need to redraw your chart. You've got a chart which on the vertical scale stops at $2,600. Redraw your chart with the vertical scale stopping at $10,000, and then make that a logarithmic scale, and you'll see it completely differently." But this guy's trading oil and grains and commodities and
Yeah.
stocks, but no interest in gold yet. Wait till these sort of guys start to move over to gold, and that will boost the gold price a lot.
Yeah, a lot of people don't understand. They think gold is just like I said, that asset or a commodity. They don't understand that it's the base of the monetary system, and they're just happy to make profits in fiat currency while they're working really hard to make a little bit of profit in fiat currency, and that fiat currency is being debased even more. But anyway, yeah, when that happens, Clive. Uh, yeah, everyone, that's when we'll we can say that there is
I will just butt in on one thing here. NVIDIA's results, which came out, they were way better than, well, they were certainly better than the forecast by analysts, the analyst number, but they didn't beat what's called the whisper number. That's the number that analysts whisper, but they say, our official forecast is this, but I think they're really going to make that. And the share price went down on that day by about 8%. I think it's recovered a little bit since then. But of course, NVIDIA's worth $3 trillion. Can you imagine what would happen if just a few percent of NVIDIA was to find its way into the gold market? The gold market is way, way smaller than the market capitalization of companies like NVIDIA, or let's say the top 10 companies anyway. So if people start to get disillusioned that the growth in these high-tech companies isn't meeting their very, very high expectations, money might start to flow out of gold, out of tech stocks into something else. And I think gold with its recent performance is looking like something they probably are going to be asking their advisors, do we have any gold? And then they'll get the answer and they'll say, oh, I don't think that's enough. So I think that number's going to go up.
I was speaking with a friend of mine, and he's invested heavily in the miners now. And he was saying that the Magnificent Seven, I think if you add their market caps, it's almost like 20 trillion. And the gold and silver miners is about 500 billion. So it's a complete chasm there. And we're not saying that technology is going to collapse. It's just that there's might be a little shift. And yeah, I'm not convinced either it's going to collapse because I think the central bankers won't allow it. And that's why I see a melt up coming. But Clive, anyway, thanks for coming on as usual. And I wish you a great weekend and also the viewers, of course.
Thanks. Bye bye, everybody.